Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Cohn. This is the Forex Super Model daily briefing for Tuesday the 7th of the 9th, 2021. Time has just gone, just gone 0435, just gone 4:30 in the morning GMT. Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday then, Monday the 6th, the first trading day, we had a positive unopposed driver in the dollar at plus 50, no backdoor flows. The opposing negative flows mainly coming out the pound at minus 43, out the yen at minus 6, and the euro was the negative rock at minus 1, activity plus or minus 50. Intra-week then, this is from Monday yesterday, the 6th open to about 15 minutes ago. We've got a positive opposed driver in the dollar at plus 22, front and backdoor flows mainly coming out the pound minus 19, out the yen at minus 15, and the euro was the positive rock at plus 12, activity plus or minus 34. Right, so yesterday we had a strong thump up in the dollar. We tried to short the euro dollar in a big way. We had 7 full positions running. We ended up at a peak, we were about 120 points up, and it came back against us, and we ended up chopping it out around 4 o'clock in the afternoon. For about 20 point profit, so nothing, basically it broke even. So anyway, hard luck, carry on. Intraday, which is today, Tuesday the 7th, so it's the Asian session, to about 15 minutes ago. We've got a negative opposed driver in the dollar this time, minus 27. Front and backdoor flows mainly going into the pound at plus 24, into the euro at plus 12, and the yen is the negative rock at minus 9, activity plus or minus 36. Right, we'll stop it there and write up the flow. Right, we're back. We've written up the flows then. So the euro is weak except against the dollar and the CAD, which are weaker. The yen is strong except against the Swiss. The pound is strong except against the yen and the Swiss. The Swiss is strong across the board. The CAD is weak except against the dollar. The AUD is strong except against the pound, the yen and the Swiss. And the New Zealand is weak except against the dollar, and the dollar is weak across the board. So what have we got? We've got Swiss strength across the board, and dollar weakness across the board. So I take the pick in the middle. Right, so what's going to knock it about, or has knocked it about? China trade balance came in positive earlier today, this morning. We've got the Australian Bank of Australia, Reserve Bank of Australia rates decision today. Euro GDP. Tomorrow, Wednesday the 8th, we've got JPY GDP and CAD rates decision. And Thursday the 9th, we've got China CPI, inflation data, and ECB rates decisions. So we've got 3 rates decisions, and they're kicking off fairly shortly with the AUD. So it goes AUD, CAD, EUR, rates decisions. Right, so okay, we'll stop that there and we'll write up the asset classes. Right, we're back, we've written up the asset classes. Right, so US dollar index basically had a double top, it broke, it's come back, it's 0.4 from the high, so it's 40% from the high. The dollar came back a little bit, but it's basically where it was. It's 40% off the high, so it's soft. Gold should like this in theory, so it's 0.36 off the high. Oil is at half marks after a big rise and a big fall, so it's 50%. Wall Street is just off the highs. S&P and tech are at the highs, at or near the highs. US 10-year, it's basically, this is the price. The price has come back 40%, so it's 0.4. The price has come back 60%, so it's 0.4 from the floor. So it's 40% above the floor. Excuse me, which means that the yields are relatively strong in the US in model terms, and the bund is 0.242 from the high. So we're starting to see this gap again in yields from the bund and the US 10-year. So prices are relatively higher in Europe on the bund to the US. Therefore, yields are relatively lower in Europe as opposed to the US. So this arguably gives a good base to the US dollar, and yet the US dollar is pretty weak. It came up yesterday a bit, but we'll see. Anyway, copper's been messing about, had a break, it came back down, and it's now 0.43 from the high. Thinking about it. So US steel had a break, and it's now 0.4 from the high. So they're all sort of ranging really. So let's get rid of this and then talk about what we think is going to happen today. As I said, this week we've got 3 rates decisions, and we've sort of been limbering up after NFP Friday, and we had a market holiday yesterday as well. So let's have a look. So in terms of the flows then, so this yesterday, which was Monday, the first trading day, we had a positive unopposed driver in the dollar, which normally means one of two things. It either means it's a short-term top in the dollar, in which case it's going to carry on going down, or it's the start of a ramp up in the dollar, and so we need to think about what's going on there. Last week the flows were the dollar was negatively driving, so the dollar was soft, and the pound was strong, and the euro was strong, and the yen was weak. So that sort of ties in with where we are. So we've got the dollar, the euro, the yen and the pound. You've got a rates decision on the euro coming on Thursday, and you've got AUD and CAD rates decisions today and tomorrow, Wednesday. The dollar index basically is has come back down. It's about 0.4 from the high, so it's 40% off the high. Last week the dollar was negatively driving, so it's got potential, and we've had this yesterday. We had the dollar as the positive unopposed driver. So there's potential for a rebound in the dollar, and obviously that will link in with how we're perceiving the European ECB rates decision. And also, if you look at the 10-year, the US 10-year, they're starting to perk up rates relative to the bond. So yields starting to get a bit of yield divergence as well. So it's quite possible, and if you look at the flows as well, we've got dollar weakness in the Asian session at the moment. Now that may reverse, but it would be see what's happening. So we've got dollar weakness, so the picture isn't 100% clear. So the Asian session, we've got dollar weakness across the board, but that may well just be sort of creating a base to ramp up from. But we'll see. So don't be surprised if the dollar starts to increase again today. It's got plenty of elbow room to do, and also don't be surprised if it carries on falling. So that's basically where we are. It's undecided, and I think the Canadian rates decision, the Australian rates decision is probably having an effect. The pre time is probably having an effect on the dollar Asian flows. So that's where we are. Equities are at the highs or near the highs. So that's where we are there. And if you look at the Swiss is strong. So it did across the board. So it's probably just a temporary pullback before after this AUD rates decision. So that's where we are. It's likely we're going to see dollar strength would be our guess. today. So that's. But as I say, it's not 100% clear at the moment. As we move into the European session, it will become clearer. But if we had to stick our stick in, then we'd be going for a rising dollar in the European session and maybe the North American session. So I hope that was useful. Sorry it's a little bit vague, but there's a lot going on with all this data noise, etc. So thank you for watching. See you again tomorrow for the briefing.